Problem 1 in Connect, exercise 10.6 in your text, asks us to look at some information about this company Baird Manufacturing and decide if these costs are either product cost, meaning they add value to the product, they contribute to the production of the product, or they're entity sustaining costs insofar as that they add value to the company but not to the products. And it asks us to identify which of these are product cost, add value, get added to the product as part of cost of goods manufactured, or which get simply expensed as selling and general administrative, SGA, and they go right to the income statement. So the company president, his salary, you think that he goes out and works on the assembly line? I don't think so. So we're going to identify period costs, that selling and general admin cost in orange, and anything that's product cost we'll highlight in blue. Next we have the Vice President of Manufacturing. Well, he's in charge of manufacturing, so that's a product cost. He supervises the product development, the product production. The Chief Financial Officer. Well, the Chief Financial Officer does everything for the finances of the company. So that would be a period cost. That would not be a product cost. Part of it is, but part of it is paying the rent, paying the insurance, making sure the sales staff has cars. So that's a period cost. That's selling and general administrative. Salary of the Vice President of Marketing. When you see marketing, that is always a period cost. Selling expenses are the very essence of selling and general admin costs. Salaries of the middle managers. Well, the middle managers, they're the folks that are out there on the production line making sure stuff is done, looking over the shoulders of the line workers and saying, put on your safety equipment, make sure you do this, have you checked that? So that's clearly manufacturing. The wages of the production workers, that is clearly manufacturing product costs. Salaries of administrative, admin, it's period cost, period cost. Goes to the income statement. It doesn't add value to the product. It's for the good of the whole company. The salaries of engineers and other personnel responsible for maintaining the production line. Well, engineers, maintenance crew, they keep the stuff running, so that's clearly a product cost. And the sales staff at this point, you know, is always selling and general administrative. So they want us to first determine what is the amount of payroll that would be classified as selling and general administrative. So we'll add up all our orange numbers, and then we'll go through and we'll add up our blue numbers because they will be product costs. So these are our selling and general administrative costs. So we have the salary. Of the president. If you remember right, that number was $75,000. We have the salary of the CFO. And the CFO, he mustn't be very good. He makes $42,000. Oh, that's for a month. Okay, I thought it was for the year. I was going to say, he can't be a very good CFO for $42,000 a year. Salary of the Vice President of Marketing. Again, Vice President of Marketing, These are selling and general administrative, because you see marketing, you know it's selling and general administrative. So 40 grand. Just coming down and grabbing the orange numbers. Orange, you're glad I did that. Salaries of admin secretaries. They make 60,000. And the salaries of the salespeople, the commissions, that's always a selling cost, and that's always variable, because commissions are based on sales. 146,000. So when we total those, we come up with 363,000. So that's total selling and general administrative. They are period costs. They go to the income statement. They are charged against the current production, their income statement numbers. Now, the next thing it asks us to do is, assuming that they made 5,000 units of product and sold 4,000 of them, determine the amount of payroll cost that would be included. That's the key. That's the trick. Because we have to first consider the total payroll cost, and then we have to put a percentage in. And they told us that they sold 4,000, they made 5,000, so they sold 80% of what they made, and that 80% goes to cost of goods sold. That's the piece they wanted you to see. So let's go through and do that piece. Now we're going to add up the blue numbers. So the payroll costs that would be classified as product cost, VP of manufacturing, 50 grand. The middle managers, often called line managers, 147,000. 147,000. Sorry, I write funny numbers sometimes. Production workers. That's always. It's direct labor. That's one of the things that's added to the product as you're making it. 703,500. And the engineers and the maintenance crew, they're 133,500. So all together, that totals 1,034,000 of total manufacturing costs, product costs that get added to the product. However, that number is for 100% of the production. We only sold 80% of the production. So we need to take that number, 1,034,000, multiply it by 80%, and we come up with 827,200 goes to the cost of goods sold. Now, if you want to do it the other way, then there is another way to do it. You can take 1,034,000 34,000. Divide by 5,000 to get the cost per unit, and then multiply it by the 4,000 units you sold, and you'll still come up with the 827,200 for cost of goods sold. As with most managerial accounting problems, you have to wade through the accounting babble to get to the essence.